Ivan Boesky, and the greed of Wall Street. In the world of high finance, information is power. On Wall Street, fortunes can be made in seconds. A single piece of confidential information, shared at the right moment, can mean the difference between massive profit and devastating loss. In the 1980s, one man built an empire using that advantage. He became one of the most powerful traders in America, but when investigators uncovered the truth behind his success, he would become the symbol of an era defined by ambition, excess, and greed. His name was Ivan Boesky, and his fall would expose one of the largest insider trading scandals in the history of Wall Street. Ivan Boesky began his career far from the glamour of high finance. Born in Detroit in 1937, he grew up in a family that ran a small restaurant business. His early life was marked by ambition and determination to rise beyond his circumstances. Boesky eventually entered the world of finance and began focusing on a specialized strategy known as risk arbitrage. Risk arbitrage involved betting on corporate mergers and acquisitions. When one company announced plans to acquire another, the target company's stock price usually rose. But before a merger became public, that information was highly valuable. Traders who knew about upcoming deals could buy shares before the announcement and sell them later for enormous profit. Boesky built his reputation as a master of this strategy. By the early 1980s, he had established his own investment firm and was managing billions of dollars. His trades were bold, aggressive, and incredibly profitable. Investors admired his ability to corporate takeovers before they happened. On Wall Street, he became known as a financial genius, but many began to wonder how his predictions were so accurate. During the takeover boom of the 1980s, corporate mergers became one of the most lucrative areas of finance. Investment bankers, lawyers, and corporate executives were involved in confidential negotiations that could move billions of dollars in the stock market. For traders like Boesky, access to inside information could be worth a fortune. And according to prosecutors, that was exactly what was happening. Investigators later discovered that Boesky had been secretly paying insiders for confidential information about upcoming mergers. With advanced knowledge of these deals, he could purchase shares before public announcements drove prices higher. The profits were enormous. At the height of his success, Ivan Boesky controlled billions of dollars in investment capital. Of extraordinary wealth, luxury homes, expensive cars, and global influence became part of his public image. He even delivered speeches about the culture of Wall Street. In one famous speech to business students in the mid-1980s, Boesky made a statement that would later define the era. He declared that greed is all right. At the time, the comment was meant to celebrate ambition and financial success. But after his scandal was revealed, those words became a symbol of Wall Street excess. By the mid-1980s, regulators had begun investigating unusual trading activities surrounding corporate takeover deals. The U.S. Securities and Exchange Commission, along with federal prosecutors, launched a major insider trading investigation. Evidence eventually pointed toward Ivan Boesky. In 1986, authorities uncovered proof that Boesky had been trading on inside information. Facing overwhelming evidence, Boesky made a dramatic decision. He agreed to cooperate with federal investigators. Boesky's cooperation would have enormous consequences. In exchange for a reduced sentence, he provided evidence against several figures involved in illegal trading networks. Among the most important individuals implicated in the investigation was Michael Milken, the powerful junk bond financier at Drexel Burnham Lambert. Boesky secretly recorded conversations with other Wall Street figures as part of the investigation. These recordings exposed a network of insider trading that extended throughout the financial industry. The scandal quickly expanded beyond a single trader. It revealed how confidential corporate information had been used to generate millions in illegal profits. In 1987, Ivan Boesky pleaded guilty to insider trading charges. The punishment was severe. He agreed to pay $100 million in fines and penalties, one of the largest financial penalties in Wall Street history at the time. He was also sentenced to prison. For a man once considered one of the most powerful investors in America, the fall was dramatic. His investment firm collapsed. His reputation was destroyed. and his name became permanently associated with Wall Street greed. The scandal had a lasting impact on financial markets. It forced regulators to strengthen enforcement against insider trading. Investigations expanded across the financial industry. Several other traders and bankers were prosecuted as a result of the information Boesky provided. The case became a defining moment in the history of securities regulation. It demonstrated that even the most powerful figures on Wall Street could be held accountable. The cultural impact of the scandal extended far beyond the courtroom. Ivan Boesky's story helped inspire one of the most famous characters in cinema. In the 1987 film Wall Street, actor Michael Douglas portrayed the ruthless corporate raider Gordon Gekko. The character's famous line, "Greed, for lack of a better word, is good," captured the spirit of the era. While fictional, Gordon Gekko reflected the culture of aggressive wealth and ambition that defined 1980s finance, and Ivan Boesky's real-life scandal played a major role in shaping that narrative. Today, the insider trading case of Ivan Boesky remains one of the most famous financial scandals in American history. It revealed how access to confidential information could distort financial markets. It exposed the dangers of unchecked ambition in high finance, and it reminded investors that transparency and fairness are essential for trust in the market. Boesky once stood at the pinnacle of Wall Street success, but his empire was built on secrets that eventually surfaced. His story remains a warning about the cost of greed in the world of finance. Because on Wall Street, information can create fortunes, but when that information is stolen from the public, the consequences can be devastating.